a very short introduction to Index Insurance Solutions. So that's just going to be one slide, and then we would already hand off to our speakers. First of all, we are going to have some input from our very own Regina Simos from A2II. For those who have not had the pleasure to meet her yet, she is the A2II Regional Coordinator for Latin America, and from 1994 to 2015, so for quite the extensive period, she worked at the Superintendence of Private Insurance, the Brazilian insurance supervisor. So for all questions that go to the supervisory perspective, she is probably the best person to ask in this room. Then secondly, we're going to hear from Pietro, and I'm probably going to butcher your name because I forgot to ask you beforehand. Is it Magnoni? I hope so, who works as climate risk insurance advisor at the World Food Programme headquarters. He's going to give an overview of the World Food Programme supported climate risk insurance programs and examples of implementation from the field. And then we're going to hear from Martina Wiedmeier-Pfister. She is a consultant on inclusive insurance regulation and market development and has been involved in research projects in country diagnostics and is currently advising many regulators in different countries and also working as a consultant with A2II. And she's going to give us an overview of stakeholders in inclusive index insurance and provide a bit of a private sector lens. And after that, the floor is really yours. We're going to completely open up for any questions that you might have, and our panelists are very happy to answer anything that might come up. So I'm, again, encouraging everyone to make good use of that. Okay, let's start with that very short introduction. If I would go to the next slide, perfect. So Index Insurance Solution, index-based insurance, also known as parametric insurance, is an insurance product where payouts to the policyholders are triggered by a pre-agreed index, which should be objective and independent. So how does it come to be? Before the start of the insurance period, a statistical index is developed, which is then based on historical data tracking long-term averages of a particular parameter. So that could, for example, be a weather parameter, most often tracked through weather stations or satellite to measure deviations from the index. So the example is rainfall, temperature, earthquake magnitude, wind speed, crop yield, or livestock mortality. So for example, if you take farming, which we've been talking about so much in the lab so far, and then you could say that the index could be triggered whenever there is enormous amount of rainfall that would destroy any crops, or if there's not enough rainfall that actually the crops cannot grow and it just end up having not enough water. So those are just, I think, the basics that we all start from. So we know what the index insurance or parametric insurance solutions are, but I think we've all gotten to this point in the lab to have this understanding already. And as a second slide, I would like to give, especially when it comes to climate risk insurance, that this happens at the various levels. We can have the macro solutions where the risk transfer actually protects the contingent liabilities to a government. We have the meso level where the risk transfer protects the risk aggregators, such, for example, as bank or agribusiness. And then we have the micro solutions where risk transfer actually happens directly at the individual level. It protects the individuals, like what we've been talking about a lot with our beneficiaries, the smallholder farmers or household level. And as you can see on the right-hand side, we have made some examples of where that might, which organizations, which implementation partners might be working at that level. And I think we're going to hear some of that also from Pietro later for the R4 program of the World Food Programme at the micro level. So just to keep that in mind, the macro, meso, and micro solution level, because I think Martina is also going to talk about that. I'm going to stop talking now and actually give the floor to the people that know a lot more and are much more interesting in this context. In that case, I would ask Regina to maybe unmute yourself. I'm going to bring up your presentation and then we can start.
Thanks, Joscha.
It's coming up. Okay, thank you. I hope that's visible to you.
Yes, for me, yes. Yeah.
Then the floor is yours. Thank you, Regina.
Thank you. Thank you very much, Yosha. Hi, everyone. Thank you for your interest in the topic. I will present some findings from the survey on index-based insurance carried out by A2II in the second half of 2020. The results of this survey are available in the publication Index Insurance 2020 Status and Regulatory Challenges on A2II website. This paper aims to support supervisors and other stakeholders to understand and evaluate index-based insurance. It's important to highlight that although the information data are from 2020, the challenges faced by supervisors at the time are the same as they face today. Of course, since 2020, there have been many advances, and currently there is more experience and knowledge on the topic. For those of you, starting from the beginning, for those of you who are not familiar with index-based insurance, also known as parametric insurance, it is an insurance product which payments to the policyholder are triggered by a pre-agreed index which should be objective and independent, for instance, temperature or wind speed, as mentioned Yosha before. I'm still in the first slide, don't worry, Yosha. And in theory, any risk that may be linked to an index could be covered with index-based insurance. So in total, 28 supervisory authorities were interviewed in 27 countries, 25 of them from emerging markets and developing economies. On the industry side, we had 11 respondents from both emerging and developing economies, as well as from developed countries. Next, please. So, as I was mentioned at the time of the survey, 16 jurisdictions indicate that the legislation force either allow or raise no barriers to index-based insurance. Some African and Asian supervisors have launched their national index-based insurance programs in the first decade of the century, such as Mongolia in 2006 and Kenya in 2009. And as a number of countries have made index-based insurance products viable in less than a decade, either under the current regulatory framework or by issuing new regulations. Next, please. The survey also indicate that the three main, I think there is something wrong with the presentation. Oh, this is the one that should present in the previous slide. It's okay. So the survey findings also indicate that the three main concerns among supervisors refers to inadequate or insufficient data, the limited actuarial and technical capacity of insurers to implement index-based products, and the adverse basis risk. The lack of technical skills or experience of supervisors themselves with this type of insurance is also a major concern, which is why most of them consider it necessary to provide specific training to their teams. But no doubt, a key issue is the fact that index-based risk transfer contracts may not fit within the definition of insurance and therefore within the current legal and regulatory framework. Next, please. In fact, the legal impossibility of recognizing index-based risk transfer contracts as insurance and within the regulatory framework be index-based insurance. This is the case for jurisdictions where the legal definition of insurance is strongly linked to concept of indemnification of actual loss or damage, or where index-based risk transfer contracts fall under the derivatives framework. So, to address these issues, supervisors have adopted different approaches depending on whether or not the governing laws provide flexibility to allow for favorable interpretations. Three regulatory approaches were identified through the survey. The first one, the approval of a specific laws or regulations regulating index-based insurance, providing legal certainty for this type of insurance. Argentina, Puerto Rico, and Uganda gave us examples of this approach. Another approach is the issue of a legal opinion in favor of including index-based products within the scope of the insurance legislation based on the insurable interest at the date of contracting. This interesting example is given us by Brazil and Costa Rica. The third approach is the adoption of a is yeah. So the third approach is the adoption of a pilot project, generally in the context of a regulatory sandbox, as an exception to the governing law. This can allow a product to be tested in a controlled environment before introducing any alterations or approving a specific regulation. Mozambique and Kenya are examples of this approach. Next, please. Next, please. Yeah. So industry response also indicates to what they see as barriers and facilitators to the development of index-based insurance. Among the barriers, the following stand out. The absence of index-based insurance regulation or even a ban on these products in some jurisdictions, the lack of data, and the lack of understanding of index insurance products by supervisors. For the reason, they stress the importance of prior discussions with the supervisors in order to ensure adequate explanation about the product. Regarding facilitators, they underscore the importance of setting up regulatory sandbox or innovation hubs. Similar to innovation hubs, insurers in the more developed countries suggested the setup of a structure to assess benefits or innovative products, uh, as well as its adverse effects. They also suggest a limited window of opportunity to allow corrected action both before and after a product implementation. Other suggestions are also highlighted, such as more flexible regulations to stimulate new products, simpler training requirements for intermediaries, special tax treatments, and carrying out agricultural censuses. And very importantly, that supervisors play more active roles as facilitators, for example, by coordinated and guided discussion between stakeholders, as you are doing now. So, next, please. According to supervisors taking part in the survey at the time, there were some 53 products being marketed in the 16 jurisdictions where index based insurance was permitted at the time of the survey. These products were offered by 74 insurers. As you can see, there were more insurers than products because some of the programs implemented in these jurisdictions were structured in the form of a consortia with a single standard product for all insurers. This was the case, for instance, in Ghana, Mongolia, and Mozambique. Next, please. So, at the time, at micro level, most products focused on risks related to agriculture and livestock. especially for smallholder farmers. But there was a range of products providing protection for several segments, ranging from low-income consumers and SMEs to more sophisticated clients such as construction and transportation companies. At the meso level, they target the agribusiness sector, banks, and microfinance institutions. The distribution channels included the traditional ones, but also alternative channels that are more adapted to the realities of respective countries, such as retail store, internet platforms, farmers association and cooperatives, savings and credit cooperative societies, and other kinds of aggregators. In general, products were marketed on an embedded basis, for instance, tied to inputs and distributed by agribusiness traders, or through tile sales involving other financial services such as credit provided by banks and MFIs. Next, please. So, it's still there?
Josh, we can't see the presentation. It's just your screen.
Yeah. Thank you. So, agricultural insurance coverage prevails based on agrometeorological indexes with an increase in area yield products, but a series of innovative products was observed with more complex and precise indexes. For example, this is very interesting, a health microinsurance that use the number of blood cells as an index, or yet damage risk for temperature sensitive cargoes measured by temperature sensors. There was also a number of products that cover asset risks and other designers to meet the needs of more sophisticated clients, such as net losses for a hydropower plant caused by drought in Colombia. Next, please. I think that is still one.
No, there's not more on my end.
So
just continue talking.
Okay,
otherwise.
So, as a final message, I would like to highlight that actually is the final message. As a final message, I would like to highlight that index-based insurance, due to its structure and its rapid evolution, raised the need to continuous monitoring, including its impacts on consumers. This requires that both the industry and mainly supervisors are properly trained to face the new challenge that undoubtedly due to come. So I would like to thank you for your attention, and Yosha, back to you. And sorry for the...
Absolutely not. That was a great input. Thank you so much, Regina. I think we worked through all the hiccups that we had in between. So that was great starting point to talk about the supervision. Again, apologies if the subtitles didn't work to our French-speaking participants. We were sent around a translated version of the presentation, and you can also rewatch later in the recording. If anyone has questions, please put them in the chat already. And without any further ado, I would hand off to Pietro to give us your perspective.
Sure. You can see your slides.
Thank you, Joshua. Yes. Good morning. Good afternoon, colleagues. Let me just put this in full screen. Fantastic. So yes, good morning. Thanks for your participation. Thanks to our A2II colleagues for the invitation. My name is Pietro Magnoni. I'm a climate risk insurance advisor for the climate and disaster risk financing and insurance team for the World Food Programme headquarters in Rome. And today's kind of objective for this session is a little bit to walk you through on how WFP is approaching and implementing index insurance throughout, let's say, in different ways and at different scale, as a way not to really show you how us as a humanitarian organization are implementing. So I'll give you kind of a quick context, try to give you an outline on WFP's let's say, climate action and how we're trying to frame our operations. Give you, again, an overview of how and why climate risk insurance is playing an important role in our programs, and then go into hopefully some more, practical case studies on some of our implementations, in this case, in Mozambique and Guatemala. So on a general note, we as the World Food Programme are one of the leading humanitarian organizations, and our objective is really, to save and change lives in emergency and, let's say, conflict areas, with the overall goal, right, of focusing on food security and eradicate hunger and famine as ultimate goals. Within, obviously, right, our mandate and our objective, we do have a strong climate focus and climate lens, and we're really trying to, position and framing ourselves as trying to support both governments and communities in, understanding and mitigating elements of climate change on their overall food security. And within, let's say, this goal, climate finance instruments are becoming, more interesting to explore and more valuable for, our communities, our project participants, beneficiaries, and government counterparts. On a general context, I mean, I think we're all extremely aware of where we are in the climate trajectory, if you will. We're seeing that climate events or the climate crisis is becoming more frequent and severe. We've seen that since the adoption of the Paris Climate Agreement in 2025, we've experienced even hotter years above historical averages. And, we have vulnerable communities, areas that are mostly hazard prone, vulnerable to these events, who have at the same time, right, no role in creating this problem that we're now facing. In all of this context, in a simple, let's say, way, we have needs, necessities that are increasing while funds to respond to these emergencies to provide support are relatively stagnant. How is then kind of WFP, tackling the climate problem, the climate crisis? We kind of revolve around four key pillars. We try to anticipate, and this is, let's say, all our work that we do on the anticipatory action, climate services, working with national Met departments to improve, the risk mapping, in order to make informed decisions with our program and possibly anticipate the actual hazards before they turn into disasters. We have the protection pillar, which is where, let's say, the climate and disaster risk finance and insurance team falls, which is exactly that, right? Try to devise instrument programs, initiatives that can protect the most vulnerable populations from the impact of these climate shocks. We then have all our realm and, let's say, line of work on the access to energy, which tries to really provide access to safe and clean energy in order to maintain or improve food security. And then we have all our, let's say, our restoration work, which is trying to leverage nature-based solution and, let's say, build climate resilient infrastructure. So as the point, or let's say the purpose of today was really to focus on, let's say, our protection pillars, so on climate risk insurance. Big, let's say, component of what it is, and I think my previous speaker Gina really gave us an excellent overview. For us as WFP and how we're promoting it, it is really a risk management tool that can compensate people if they face financial loss, right? The idea in general, and I'm sure we're all familiar given the industry that our participants are, is that, insurance company pool different premiums and risk, sell it to kind of reinsurance in the international market, so that then we can distribute to the policyholders in case an event occurs. So really, again, for us as WFP, and we've been implementing different types of index insurance, is a kind of transparent modality, right, to protect food security, to avoid our beneficiaries, to resort to negative coping strategies, right? With an insurance, in case of an event, you receive a potential payout, and that cushion, that financial compensation, can help you support or maintain at least your current food security. So again, kind of already touched base on it. Why, right, are we as World Food Programme really implementing these kind of solutions? We are seeing that because of the nature of the work that is needed to develop climate risk parametric insurance, it improves our own, let's say, mandate, right? So our whole work on emergency preparedness, response, and resilience outcomes. We're also seeing that in face of stagnant resources and issues in fundraising, we have a more cost-efficient, let's say, funding mechanisms, right? Where insurance is one part, there are additional tools, but it's definitely, right, an important component. With our work with the government, it really supports the system building element that we try to integrate, right? So the whole work and conversations on social protection systems being more shock responsive to climate events, working with the regional risk pools, such as the African Risk Capacity or CRIF, to again improve the climate risk management of certain countries, working with the private sector, as that's a fundamental element in all of this, let's say, value chain and work. So again, really in a nutshell, and I'll try to maybe pinpoint a little bit this slide, is for us is really a way to change or improve the disaster management cycle vis-a-vis climate events. So we see our top let's say, line with the current emergency response. I'm sure we're all aware, right? We have an event. We try to assess, right, the impact of that given event on the population, on the vulnerable areas. We try to appeal, right? We ask and funding. We ask for funding, right, to international partners to try and gather the fund in order to implement what we would say, right, a traditional response. On the bottom side, we see the kind of climate risk financing sequence in relation to the disaster management cycle, right? So we could have a variety of instruments, such as anticipatory action or forecast-based finance, microinsurance, macroinsurance, positioned or being implemented that can support, relevant stakeholders, whether government or vulnerable communities, to react to the given events, receive potential compensations that can limit, right, the overall need, given that we are reacting before rather than waiting for the usual, let's say, funding mechanisms that we currently face. Going back to kind of how and what we try to implement, and I think this is very important and was touched base before by both Joshua and Regina, is the different levels that we can work around and with climate risk insurance. And we as WFP really work on all three levels, and what we are being called as micro, meso, and macro, based on the current and the context-based needs, the vulnerabilities, potentially the funding, the willingness, let's say, and interest of both private and public sectors. So there is no one formula fit all, but it really will depend on the context. And again, I think we dwelled into some of these aspects extensively already. On a general note, on the micro level, we really try to work again with subsistence smallholder farmers, trying to leverage or sometimes create farmers associations, maybe also trying to promote, and I'll go into a little bit more detail after, village savings group and formal savings groups. So again, really working at the community level with the relevant partners. On the meso level, it's really right trying to support the aggregators. Again, it could be local government, municipality, input suppliers, banks, MFIs, and again, really right, try to leverage their outreach, their structures, provide them compensation, and to the beneficiaries, the individual being aggregated within that aggregator can receive, right, the benefit. And then on the other hand, right, we have the more government-led, or if you will, humanitarian perspective of climate risk insurance, which is the macro insurance. So again, the work that WFP has done with the African Risk Capacity, both on the replica, so WFP being the policyholder, but also supporting the government in both accessing, let's say, higher coverages, complementing existing premiums to, again, really support the government's potential response. On the micro level, as I mentioned, for us, insurance is, and I think we will all hopefully agree on this, is not the solution to all our problems, right? It's not the silver bullet. And how we as WFP have been implementing it is under what we call the R4 program, which is the integration of different components, so that, again, there's the complementarity of different tools. So just transferring risk won't be sufficient to support our communities, our participants. It's about the integration of different elements of disaster risk management. We work on the, again, as I mentioned before, on the risk reduction. So trying to work with our communities on nature-based solution, improving agricultural practices, focusing on adaptation and mitigation, again, obviously depending on the context, but really try to reduce the inherent risk in their livelihood, in their agricultural activity. As I alluded, we try to promote risk retention, right? So the financial savings, informal savings within our programs, really leveraging, again, the local structures at community level that already exist, and then trying to maybe bridge that profile, that community, that area with, social safety nets that might be available, or other social protection systems. We work a lot also on what we say the productive risk taking, right? So the trying to promote diversification, productivity, access to credit, and access to market for our participants, beneficiaries. So again, right, they can try to invest, create, expand, let's say, their main economic activity. And then we would obviously focus right on the insurance. So the transferring the risk, right? Trying to create insurance coverages that cover those large events that would limit our, beneficiaries' food security in case of a negative event. Quickly to give you a snapshot on a little bit how we are and, let's say, WFP's portfolio. And again, just a snapshot, as I think I'm also running out of time, and I wanted to give you a more specific case studies. We are operational in 27 countries with different micro and macro climate risk solutions. We've reached 5.1 million people by providing them coverages for a total of $300 million of financial coverages for 2023. And within 2023, we've had we were just shy of $18 million of insurance payout from policies, let's say, that have been developed through us or by working with WFP operations. Going into now a little bit more detailed, let's say, on the case studies. As I mentioned to you before, I wanted to highlight two interesting case studies where we've been implementing index insurance at the community level. The first one is Mozambique, and there we have two different models. And again, as Regina mentioned before, two different indices, as we can really create different indices based on the current need. One is a more traditional weather index insurance focusing on rainfall, excess rainfall and rainfall deficit. versus the other one is a soil moisture index, which then tries to capture, leveraging remote sensing data, the soil moisture of specific crops. We've been currently implementing this in 6 districts, in 2 different departments in Mozambique, by partnering, obviously, right, with the private sector, the local insurance company Hollard Seguros, and working with a variety of both reinsurers and technical service providers who supported the technical design of the insurance product. One maybe quick consideration, one of the 2 models is actually bundled to inputs. What does this mean? We are leveraging an input provider, let's say Outreach, that is commercializing maize seeds. We are piloting with Hollard Seguros a bundle of the insurance coverage with the actual seed package. So as to, again, facilitate certain distribution elements, KYC requirements, but also in terms of value, right? We are really covering that initial, let's say, fail of harvest because of a lack or a deficit of soil moisture. Again, at a really quick glance, we've kind of enrolled around 52,000 beneficiaries across the two models, exploring really different again, implementation opportunities, leveraging different stakeholders, implementing partners at the community level, with also working with some NGOs. On the other hand, in Guatemala, we kind of have a very different scheme in the sense that it's a weather index insurance coverage focusing on rainfall deficit, again, and excess of rain, but we are covering see it as a business interruption, right? So the financial elements of the insurance coverage is not per se the lack of harvest or what right could have been sold if the harvest would have been, let's say, a positive one, but it's rather the impact, right? How much livelihood, economic activity our participants might have lost because of unfavorable weather event. And this is a very interesting model that we've been exploring in Guatemala. We've reached over 14,000 households because it also allows us to work with micro and small enterprises, right? Not only subsistence farmers, but really expand our portfolio. So I'm aware of time, so I think I just wanted to highlight those. Maybe my last point before leaving the floor to my other colleagues is thanking you obviously for the opportunity, but also sharing with you here 2 QR codes that hopefully should work and should lead you to 2 publications that we as Workflow Program just made. One is the 2023 Climate Risk Insurance Annual Report, which really highlights all of our programmatic interventions where climate risk insurance is, and that really gives you an overview country by country, region by region on the type of model and partners that we're working with. And on the other hand, we have let's say the more broader macro work linking disaster risk financing instruments with social protection, and trying to see really how we can support governments and ultimately beneficiaries around this. So thank you very much for your time. I'm happy to answer any questions later on, and I'll leave the floor to Martina. Thank you, colleagues.
Great. Thank you so much, Pietro. We got our first question in the chat, so keep them coming for later, and then I would directly hand it over to you, Martina. Let me start sharing the screen. That should be visible, and then all yours, Martina.
Thank you very much. Good morning, good afternoon to everybody. I'm very pleased to be part of this lab discussion today. And I will also start with a snapshot on the concept of macro, meso, and micro insurance. Then talk about stakeholders. Next slide, please. Biosha? Okay. Can you see me actually?
We can see you.
Yeah. Okay, great, because I can't see myself, but that's not necessary. Okay. Then talking about stakeholders, because in the past years, I was part of many country processes and global or regional or national research projects. And I will share my insights about challenges stakeholders are facing when starting a pilot or when trying to improve outreach and making a scheme sustainable. Finally, I will share some ideas how you can Next slide, please. No, that's the right slide. Well, as we have heard from my colleagues already, insurance policies can be assigned to a level, macro, meso, and micro. And there are the distinguishing factors which define whether a scheme is macro, meso, or micro. And the questions are who purchases the policy and for which insurable interest, who pays the premium, and who gets the benefit. And we have seen it's not always the end client who purchases the policy. Globally, most policies are micro-level policies purchased by the end client or by a group aggregator who purchases for them. But it's good to know that there are other options. I think especially the meso-level policies can be interesting for a pilot, while most policies are still micro-level policies. Next slide, please. In a macro-level insurance policy, the government is the policyholder and the payout goes to them. Such a risk pooling model can be within one country. So, for example, when a municipality purchases a policy insuring their infrastructure, or in a region when a sovereign risk pool like the African Risk Capacity becomes member of a trust and then purchases cover against, for example, drought and flood. And such schemes, as we have seen, exist in several world regions, Southeast Asia, Africa, Caribbean region. And the payout allows the government to provide support to their population directly, or, for example, rebuild infrastructure. Meso-level schemes, they are not yet widespread. So a local aggregator purchases the policy mainly to ensure business continuity. This can be a company, a cooperative, or a bank, or an input supplier. And I was involved in a model in the Philippines where a cooperative-owned microinsurer bought such a policy to protect member cooperatives from rainfall and wind speed. And the primary cooperatives were paying this policy, over 150 of them already in 2023. Simple claims processing is a key feature of this policy. So the cooperatives don't have to submit documents. They receive an email notification that the index has been triggered. The claim is then processed within 10 working days. As said, micro-level insurance is the most common form of index insurance, where the smallholder family or micro-enterprise purchased a policy as a group policy or as individual policy. Next slide, please. In 2020, GIZ conducted a global survey on agriculture insurance, looking at 54 programs in lower and middle income countries. They looked at 52 national and 2 regional schemes. And most of the most insurance is for smallholders and at the micro level. They identified 265 million insured in the 54 schemes. 80% of this is identified as index-based insurance, generally for drought and flood coverages and for crop and livestock. Very few schemes are for fisherfolk. 80% of the schemes are subsidized, and only few schemes have more than 1 million clients. Most of them are national schemes like in India, China, Indonesia. And many of the schemes are pilots and small. The study found that private schemes have on average 370 policyholders only. Well, the survey also found that index insurance is often pilot-driven, and in these schemes, as we have also heard from my colleagues, new technologies are very critical. Next slide, please. For structuring a pilot in index insurance, many different stakeholders are needed in a country. So I will now delve deeper into the bold ones: the aggregator, the target group, the technology and service providers, the insurer, and the government. Next slide, please. Among the typical aggregators, we have heard that from our colleagues, are the following: cooperatives, input providers, lenders, health mutuals, or micro-enterprise associations. Very common nowadays are agriculture input providers and lenders, and the others are kind of newcomers to being an aggregator. Aggregators are close to the people, and they want to get insurance for their members or clients. They know them, they are trusted, and they have structures in place, like a member inventory or a simple bookkeeping system, and they can act as coordinator. They may assume a formal role as a licensed insurance intermediary. This is a regulatory question, for example, like the rural banks in the Philippines. In other cases, they are service provider only, without a license. And there are many types of associations out there, for example, also for urban micro-enterprises with the potential to be linked up for index insurance. In Ghana, we spoke to micro-enterprises, metalworks and car repair shops, and their association has the client data of 1.3 million members across the country. The association was very eager to act as an agent. Or like the Fishers Mutual in India, a member-based organization who gathers, informs, and motivates their members and has purchased index insurance for their members' assets. They have already purchased index insurance for 7,000 vessels and got 2 larger payouts for their members. They also helped to get life insurance for the fish vending women involved in the fish value chain. Next slide, please. A few words on the target group. Having insurance in times of increasing drought and flooding can be a survival question for many small farmers, businesses, and families. While in India and China, 80% of farmers have insurance, globally the figure is less than 10%, and in many countries this number is even lower. So in practice, it's not easy to explain and sell to people insurance who had never formal coverage before. So it is a huge investment which is needed for education, especially for index insurance, which is more complex and comes with new concepts such as basis risk or the inaccuracies of weather data. Some projects achieved good results involving farmers in weather monitoring and index setting. Considering affordability is key in a pilot. When farmers perceive that the premium is too low, is too high, the best pilot will fail. They only survive as long as subsidies are involved. Some schemes work without premium subsidy. They bundle insurance into another crucial service, as we have heard from Petro, agriculture advisory, credit, or agriculture inputs. And an example I saw was bundling in Zambia with a solar home system. The PayGo Solar Home Systems program provides index insurance to smallholders indirectly. They have a credit finance solar home system, and the solar companies are purchasing the policy as a means to reduce their default risk in the face of weather-related shocks, which would affect the farmers linked to them and their repayment ability. Next slide, please. Well, the technology and service providers prepare the needed data sets, meteorology and weather, yield, livestock, satellite, remote sensing, or loss and damage. They often help also with product design. In the scheme, I saw 3 or more TSPs are involved in the schemes. For example, for the CLIMB scheme in the Philippines, I mentioned various tech partners got together, the BISA network, Global Parametrics, and the International Center for Tropical Agriculture. And the type of service providers can be public or private, local, regional, or international, they're active. Sometimes they are insurtechs, universities, agriculture extension services, or vet services. The examples I saw were Pula, Celsius, Pro Global Parametrics, Risk Shield, and these are just some of them. There are many more. And structuring a pilot and being in cooperation with them is really a challenge in cooperation, but they have already experience in quite some market with this kind of products. Next slide, please. A few words on the underwriter, the insurance company. Most agriculture insurance is offered by private insurers, according to the GIZ survey, 60 to 70%. The rest is driven by government and some by donors. Private schemes are often small and they survive on average 6 years, according to the survey. While government schemes can be very large, they also come with challenges. For example, in India, small farmers who don't own land are not entitled to join the scheme. Drought and flood are the most common risk insured. And then what Regina presented is also a question I have come across often. What about personal risks of farmers? Demand research reveals that they also want life and health insurance apart from coverage for their crops and animals. Therefore, climate risk insurance should also include personal insurance coverages. When insurers are new to the business of index insurance for farmers and for micro enterprises, need to collaborate with many different actors. They have to find an aggregator to link up with them, the tech partners, an NGO or government office to do the education of farmers, as their staff is not trained. I was involved in an agriculture insurance study in Albania, a country diagnostic. So we spoke to many different stakeholder groups, and they were all motivated to start a pilot together and wanted to include the work into their financial sector working groups. MFIs as distributors, microfinance institutions, contract farmers as aggregators or group policy holders, insurance companies. They were convinced they have the capacity to develop index-based products for promising agricultural value chains like grapes, and the regulator was open to it and saw no hurdle to approve such a product. And finally, the Ministry of Agriculture wanted to take the lead and integrate agriculture insurance in their national strategy, which was redrafted to that date. Next slide, please. On the government, as we heard, the technical capacity of supervisors needs to be strengthened regarding index insurance because new technologies help to reduce cost, facilitate enrollment, and claims assessment and processing, but supervisors need training for that and coaching. It is also wise for a country process to involve ministries and government bodies, and not only the Ministry of Finance and Agriculture, but also the Disaster Authority, aligning the interests of these diverse public partners. This can help to avoid a silo approach and leverage efforts, for example, to secure funding and integrate index insurance into national strategies. Capacity building for government staff is needed at many levels. For example, even down to agriculture extension officers who need training how to teach farmers and can be involved. Premium subsidies is a difficult topic, just a few words on that. While most existing programs are subsidized, this can also be a threat if funding stops or is only available for some farmers. A representative of a large aggregator supporting thousands of farmers technically in risk reduction, told me that in Kenya, there are in principle subsidies for agro-insurance, but only a handful of insurance companies can access these funds. They are pre-selected. Funds are limited each year, and their farmers have no chance to access the subsidies as they are working with a different insurance company. So in principle, a sector working group can be very useful. For example, the technical working group in the Philippines worked on many topics over the years, from their first working groups for the microinsurance regulation in 2006 to a climate risk pool recently. Next slide. Well, just a few, a quick look on this slide. A technical working group on index insurance in a country can start with a rapid SWOT analysis, because a country diagnostic may take many months or may be costly. A group, I think, in a country can do that on their own using the SWOT approach. Strengths like existing aggregators with a large client base, interested insurance companies, or lessons from pilots which were there on the strength side. On the opportunities side, aggregators investing their own funds, capability of insurers who can design this project, other client education initiatives for other financial products where insurance can be added on, or supervisor open to include index insurance. Definitely there are the well-known weaknesses, like understanding of farmers, of basis risk and indexes, capacity of government agencies, or a threat, which we have seen in a few countries. Going to the last bullet, is that government payments after disaster may incentivize the purchase of private insurance for farmers and micro-enterprises when the government bails out after a disaster, which is good in principle, but has a caveat for market development. Next slide, please. I will now end with a few ideas for implementation and summarize my presentation. Plan and work together in an organized way, build a technical working group and get funding for it. And in the case of the Philippines, a small success factor for this collaboration was that they went out of the city for their workshops and worked together on the topics for 2 full days. They developed action plans and implemented it, learning together. Get funding, mobilize government and support from donors, from international NGOs or adaptation baskets, liaise in the country, and very important detail, consider the long-term feasibility from the outset, how pilots can be kept alive after development and testing phase. For example, consider affordable premiums and link to a trusted aggregator from the outset. In this question, you don't need a solution at the beginning, but you need to be aware of the challenge and, for example, include a customer-centric perspective. So I would like to close with the recommendation to liaise across border, something you're already doing. And thank you very much. I'm looking forward to our discussion now. Thank you.
Thank you very much, Martina, for ending our input session today. But we still have some time. I'm looking at a watch, 20 minutes for a Q&A session. So I would like to open the floor to all our participants to raise any questions to Regina, Pietro, and Martina. And I saw one question in the chat already from Omkar. Omkar, would you like to unmute yourself and raise the question in the, verbally here?
Thank you, Mario. Good morning, good afternoon, everyone. So I wanted to ask on the presentation of the positive speaker where she mentioned self micro insurance that was offered using platelet counts. So there are other concepts as well, but how do we, balance in providing specific coverage versus the entire coverage or the indemnity-based kind of coverage in insurance products? That was my question.
Thank you very much, Omkar. Would you direct the question to a specific person?
Uh,
Or
Regina mentioned that in her presentation, so it would be good to hear from her.
Hi. Hi. Thank you for your question. Could you repeat, please? Because I think I didn't hear very well.
So my question is, you mentioned about one example of platelet counts to provide health microinsurance.
I think I'm not now. It's my my time, my turn. I'm not hearing very well. It's like interrupting. So I don't know if someone.
Okay.
Sorry
I've
for this.
also wrote in the message. Have you
Okay.
seen
so
that?
I can just read that out again, maybe
Okay,
what you've
yes.
written, Omkar. So the
Yes.
concept of using like the blood pulse to count to offer health microinsurance is very interesting. But the question that Omkar would have is, how do you balance the need to cover a wide range of risks while also addressing the very specific niche risks that exist with index insurance?
This well, this is
Big question.
this yeah, good question. Actually, this is a very specific product. Is I think is is an example from Indonesia. There is a specific insurer that is using only this. This is the only index they are using in their product. So there is of course, there is a lot of people being affected by dengue. So they decide to offer this kind of product to cover all people that is affected by dengue. So it's actually the insurer only focus on this specific issue or this specific risk, health risk. So actually, I don't balance. So I imagine that the insurer is the one who is balancing, but it depends on the risk the insurer is taking. So I think from the supervisory perspective, that's always mine because I work for over 20 years and at the Brazilian insurance industry. What the supervisor need to do is to try to understand the product and based on the risk they are covering and try to follow up and understand and try to avoid a risk for consumers and the market as well. So I don't know if I answer your question, but that's what I can say because this is a very specific risk. So it's completely different from other risks like in agriculture or other kind of risks like at macro level, at meso level, at micro, sorry, macro, micro and meso level. So each risk is it's very specific. So that's the most important thing. You need to understand what is being covered. That's I don't know if I answer your question, but and that's why I think the industry says that it's very important for supervisors to understand the product. Otherwise, they are not able to supervise it. And the worst thing that can happen is to avoid the product but they are not that because supervisor is not able to supervise it. I think the try to understand and to talk within the industry is the better way to deal with the situation. Is this okay for you or not very clear?
Thanks, Regina. It's more clear now.
Okay, thank you.
Thank you very much, Regina and Omkar, for raising the question. And maybe let's rephrase the question a bit broader and have a look at this aspect of how can we combine the different issues, like having a very specific indicator or a very specific index, but the need to cover a lot of different risks to make the product more attractive. So Martina and Pietro, do you have any reflections on this issue? How we can join those problems or bridge the gap here?
Thanks, Mario. Maybe a quick one, and I think it's a very interesting question. You know, for us within WFP and let's say our climate risk insurance element, you know, on the one hand, we have the reality that we can't insure all the risks, right, that either our governments or our beneficiaries are facing. So I think, you know, it becomes critical understanding that, you know, risk layering approach in terms of frequency and impact of given events and what kind of instruments we can allocate. So again, what the colleagues were talking about, macro, meso, and micro, we can allocate to really make, you know, sense from also a cost-benefit perspective of the different tools. So it's again, I think it's I'm not saying the $1 million question, but I think there's a lot, right, in terms of the allocations, the compatibility and complementarity of different instruments, and the different value chains, right, that we need to. But I'll let colleagues complement. Thanks.
Well, my thoughts are we have usually we look at the demand side and try in focus groups, for example, to cluster the biggest risk they have. And in some focus groups, the biggest risk for the family was cancer in the family. Anybody, because this devastates the whole income stream of the family. Other micro enterprises told us theft is a big problem, or the death of one person. And when we have the priorities of the target group where the biggest risks are, and nowadays it may be maybe droughts or maybe flooding, then we have to focus on risks they can pay for. That's the truth. Or somebody wants to subsidize. So we can never, also myself or in our lives, cover all the risks we have, but we have to prioritize with them what their biggest risks are. And even helping them to understand this is already a big step forward.
Thank you very much, Martina. What I was reflecting here for this question, Pietro, you mentioned with the Guatemala example. I think it was the Guatemala example where actually business interruption was insured, and not the actual agricultural crop itself. So I think this might be also a good way to think about this issue, to bridge the gap, to not think of one particular crop, but rather the impact it has. So this would be the business interruption, and then develop a product that might be covering this business interruption. And there you would have another indicator, but multiple risks that would lead to one outcome. So I think this might be a nice example also to think of this issue.
No, totally, Mario. And again, maybe to complement and shed some more insights. Indeed, that's kind of the approach we took with this business interruption lens in Guatemala, but also in the broader Central America region, so also in El Salvador and hopefully this year in Honduras. Again, the two elements are the profiling, so we're not limiting ourselves to only subsistence smallholder farmers, right? But we have those also SMEs that are crucial. And are also equally vulnerable to climate events, right, in terms of livelihood and productive activity. And then that also, if you will, scalability, right? I mean, we have, I think, private sector and regulators, right? The nature and the business of insurance is able to reach, right, larger shares. And with that business interruption kind of as a basic coverage, that really supports, I think, the creation of the value chain. And then maybe one last point, what you alluded to, Mario, is that complementarity of it, right? We're looking in Guatemala to create kind of a, how can I say, an additional module, an additional coverage with a different index, more specific for example, maize producers, right? So to give them not the full coverage, if you will, of their productive investment, but at least part of what they missed out, if you will, to give them a kind of additional, again, protection by using temperature coverages rather than just rainfall deficit, again, to create that, how can I say, more reliability with the remote sensing and avoid a basis risk, as Martina correctly pointed out before. So yeah, just again, expanding on your thoughts. And again, happy to share more details on the Guatemala case with the colleagues and participants. Over.
Thank you very much, Pietro. I see Suman's hand is raised. Suman, please go ahead.
Hello, everyone. Thank you, Pietro, Regina, and Martina. It was really informative session on index insurance. So as mentioned in the presentation, like one key challenge is scalability. And it was also mentioned on average 370 policies are bared by any index insurance. So it's also a problem in developing country that we have very limited ground sensors, be it weather stations. So I was really interested in Pietro's presentation, which mentioned a case study of Mozambique. It was, I think, related to weather index insurance and also moisture. So was it through satellite-based intervention? And if so, like the other challenge would be the resolution, because not every data, like high resolution data are available. If available, they are expensive. So how do we maintain the viability of the business model? So I have questions around that. And we are really interested in Nepal to build something that's quite scalable using satellites. That way we are not limited by lack of ground sensors. So my question is towards Pietro. Thank you.
Sure. Thank you, Suman. No, super I guess question, I think already touching on the technicality, elements of the underlying assumption of index insurance. So in Mozambique for us is a particular one for various reasons. On the one hand, we as WFP already work with the local Meta department on a variety of, let's say, technical assistance initiatives. One of them is support them in purchasing and expanding automated water station. And we've been doing this now for the last, I think, 8 to 10 years, where now at the national level, we can count on around 50 to 54 automated weather stations. And then on the community level, the second consideration is that with the community level, we try to install manual rain gauges as, again, a way to make more to help our beneficiaries, our project participants, to make more informed decision vis-a-vis let's say the climate elements, right, the climatology around them. So with these two assumptions, in relation to the product of the soil moisture, indeed it's only based on remote sensing on a specific data set that was let's say selected through the technical analysis by the local insurance company. Overall, it's tricky, right, in terms of performance. What we're seeing from soil moisture is indeed it can have more reliability than only rainfall deficit, if you will, as a proxy. But we do see some discrepancies, if you will, from the losses that our project participants are experiencing vis-a-vis what the data set is reading. So again, basis risk, right? So again, we're trying to work with partners to introduce NDVI, as we're seeing a stronger correlation in terms of the avoiding discrepancy. And once again, in working with both private sector as reinsurance companies and technical service providers, we're seeing land surface temperature, especially in sub-Saharan Africa, as a really interesting index that strongly correlates with agricultural losses. But so again, I think there's a lot here. So Suman, happy again to organize a separate call, go through into some more details. But I'm sure other fellow colleagues have something to say. Please feel free to jump in. Over.
Thank you, Pedro. So maybe hopefully in the next session we can maybe discuss in detail. And probably if you could connect us with the people working on this idea in Mozambique, that would be really great.
Absolutely.
Thank you.
Thank you, Pietro, for clarifying this question. And for my understanding, that you are working a lot, but still with ground truthing data, and solely satellite-based or satellite imagery-based product is not yet in use also by WFP, sorry. So we still rely on the ground truthing data.
Yes and no, Mario. So again, we and obviously our project participant would love that the ground data would be right, the truth. We know that from our insurance perspective, we need historical data, and the less history of that data set we have, the more expensive the insurance will be, the more risk now will be inherent into that model. So what we use ground data, especially in the community, is one, to really work with our project participant around understanding climate and measuring the precipitation in these rain gauges, keeping the log, trying to understand again maybe the optimal planting, cross-referencing this with the climate bulletin that the government at district level issues at the beginning or throughout the agricultural season. And then is a way for us as WFP to collect data from the community to inform the technical design. So we go to the insurer or to the technical provider and say, okay, maybe this year in this district, we didn't have a payout, right? We didn't reach the threshold, but look at, the sources of the rain gauges, our qualitative questionnaires from farmers, our, additional remote sensing analysis, that this is showing that there was a crop failure. So maybe we have to adjust certain parameters or the return period of the product. So we really use that as, creating the narrative in improving the modeling.
Great, thank you. That was very helpful. Are there any questions from the group? I don't think so. So I would like to, we have two minutes left. So I would like to ask Regina. Regina, we are at A2II, obviously we're working with regulators. So from your perspective, do we have some key lessons learned from your work that you could give our participants today on the way that you, from your experience, were really key for regulators to establish well-designed or successful index-based products? So from your perspective, are there some points that you would like to highlight before the end?
I think the most important. I think you should take as a supervisor. You need to take step by step. It depends on the context of each country. So you have the first issue is to deal is about the regulation. You need a regulation or not. You are able to, as a supervisor, you are able to include it within the regulatory the existing regulatory framework. If you are able to answer this question, so this is the first step. So you need to provide juridical security for providers, that they are able to provide index-based insurance within the existing the regulatory framework in force. So I think this is the first step for the supervisory perspective. So then you need to understand each product, because for instance, the questions that Omka Pandey asked me, so it's about how to deal with, how to balance the need to cover a wide range of risk. Well, actually, each product is a unique. So they need to understand how it works. They need to talk with the industry. So I think the most important, the first one is supervisors need to situate themselves, and then they need to understand the product. I think this is the most important. They need to talk with the industry to understand their demands and the challenge they are facing. And based on this, that's why this innovation lab is so important, because it's a way to include all the stakeholders, to bring all the stakeholders together and to talk about the common problems they have. I think that's the most important lessons from this survey. That's hearing supervisors from one side and hearing the industry from the other side. That's but each country, each jurisdiction is unique. So you can't just adapt. You can maybe take lessons from other countries, but they need to find supervisors need to find their own way.
Thank you very much, Regina, for your answer. And if there are no further questions, looking at the time, I would just like to close with one thought. And Martina, I remember from your last slide that one important factor is actually the international exchange and the exchange with other stakeholders, with other actors who are working in the insurance sector, but not only internationally, but also within one country. So I think with the A2I lab here, we are exactly on the right track with this, at least in those aspects. And I think this is a good way to close with a positive thought. And we are on a good track here. And with that, I would like to thank all participants for taking the time to join our webinar today. And obviously our speakers for taking their time and their valuable insights. Thank you very much. And yeah, don't hesitate to ask any questions. In the follow-up, we will make the connection.
Would just like to quickly echo what Mario said, and also just looking at our Frankfurt incubator coming up, that we will also there be able to continue this discussion and also receive more input in the lab context from the country teams from Grenada and also from Zimbabwe, who both worked with index insurance products as part of the lab. So we'll be able to build on what we learned today, what we discussed today, and bring the discussion further into the lab context. So also from my side, thank you to everyone, our speakers, all the participants. And have a good day.